All right, let's dive right in. Today, we're going to crack open a professional technical analysis report for a stock called BURU Nuburu. Our mission is to decode all the clues inside and see if we can figure out where the stock might be headed.
And this is where it all begins, with this number, a massive single-day gain of over 17%. I mean, a jump like that, that's not just random noise. That's a signal, and it's one we've got to look at a lot closer. But that's the million-dollar question, right? Is this explosive move the real deal, the start of something big? Or is it just a one-day wonder, a flash in the pan that's about to fizzle out? That's what we're here to investigate.
So, think of us as detectives for the next few minutes. This technical report, that's our case file. It's packed with clues. Some are staring us right in the face, others are a little more hidden. Our job is to piece them all together and see what story they tell.
Okay, so any good investigation starts by just surveying the scene, right? Getting the big picture. So first up, let's look at the basic facts of the case. What happened with the price, and just as importantly, the volume.
So the price jumped to 40 cents, but here's the really crucial clue. The volume. Look at that. Over 232 million shares changed hands. Now, to put that in perspective, the average is just over 100 million. So this wasn't some quiet little move that nobody noticed. No way. This was loud. This had a ton of people involved. The market was definitely watching this one. All right, now that we have the scene set, let's dig into our first real set of clues. We need to figure out the stock's general direction. Is it swimming upstream, or does it have the current at its back? And for that, we're going to look at something called moving averages. You know, the best way to think about moving averages is to picture them as a compass for the stock. They kind of smooth out all the chaotic day-to-day price swings and just show us the underlying direction, the long-term path it's trying to take. Are we pointing north or are we pointing south? That's what they tell us. And wow, this is our first major clue right here. The current price, that 40 cents, it's not just above one average, it's trading above its short, medium, and even its long-term moving averages. Now, when a stock can push above all those key levels, technical analysts see that as a really powerful bullish signal. The report itself calls it a bullish short-term breakout. And honestly, that's a huge point for the bulls. Okay, so the compass is pointing up, we've got our direction, but how much fuel is in the tank? How much real strength is pushing this thing forward? That leads us to our next line of investigation, momentum.
And this is where the plot thickens. Just when you think the case is wide open and shut, we find our first conflicting clue, a piece of evidence that suggests that this powerful engine we've been talking about, well, it might be starting to cough and sputter a little bit.
Yeah, it's a classic case of mixed signals. On one side, you have that incredible 17% price surge. Can't argue with that. But on the other side, a key momentum tool called the MACD is actually negative and getting weaker. The report calls this a slight bearish divergence, and it's a major red flag we just can't ignore. It's kind of like your car is speeding up, but you're hearing a weird rattling sound from under the hood. It makes you nervous. So, to dig into this momentum question a little deeper, let's bring in another tool from the detective kit, the RSI, or Relative Strength Index. Think of it like a tachometer on a car. It tells us how fast the engine is revving. It's designed to spot when a stock has gone too far, too fast, hitting a state that traders call overbought. And what do you know? We get another split signal. The standard RSI is at 57, which is pretty healthy actually. It's positive. But a more sensitive version of it, called the stock RSI, is pegged at 100. That is literally as high as it can go. It's a textbook overbought signal. So the report's take on this? Potential exhaustion. The rally might just be running out of steam. Okay, so let's recap where we are. We have a strong trend pointing up, but some really questionable momentum readings. So what's next? Well, now we look at clues that tell us about the risk involved and whether the big money is really behind this move. And for that, we turn to volatility and volume. Well, this clue is pretty clear-cut. The report is flagging high volatility. What does that mean in simple terms? It means the stock is making bigger, wilder swings, both up and down. Sure, that could mean bigger gains, but it also means the risk has been turned way up. And indicators like the NAT-TR and these wide Bollinger Bands, they just confirm it. This is not a smooth ride. All right, let's follow the money. We already know the trading volume was massive, which is good. And another indicator, the on-balance volume, it shows positive accumulation. Money is flowing in. Both are good signs. But Here we go again. Another indicator, the Money Flow Index, or MFI, is way up at 94.55. And yep, you guessed it, that's another screaming overbought warning. So even the clues that should be positive are coming with a big but. Okay, we've laid out all the evidence. We've seen the good, the bad, and the downright confusing. So now it's time to step back, put it all together, and see what the final verdict from the analyst is. So first, let's look at the bullish case. What's going right for this stock? Well, the foundation is solid. You've got that huge 17% gain. The price has clearly broken out above its key trend lines. Another indicator called the ADX confirms the trend is strong. And of course, that massive volume shows tons of people are jumping in. These are all undeniable positive clues. But the case for being cautious is just as strong, if not stronger. You've got multiple indicators just screaming overbought. The main momentum gauge, the MACD, is pointing in the wrong direction, and we know the volatility is super high, which just jacks up the risk. The report is very clear on this. These signals suggest a pullback could be coming. I mean, it's classic behavior. After a huge jump, some people are going to want to sell and take their profits, and that can really put the brakes on things. So all of this, all these conflicting clues, it really brings us to the bottom line. The entire analysis pretty much boils down to one single critical price level, 33.9 cents. According to this report, if the stock can manage to stay above that level, the bulls are still in charge, and they might be looking at a target around 45 cents. But if it breaks below that line, the bears are back in control, and the risk is a pretty scary drop all the way back towards 8 cents. You know, when you look at everything, the entire report can pretty much be summed up by this single quote from its conclusion. The underlying trend is strong, which is great, but the engine is running so hot that it probably needs to pull over and cool down for a bit before it can keep going. It's a classic tug of war between bullish strength and bearish exhaustion. And that leaves us with the big final question, doesn't it? You have this powerful uptrend on one side, clashing head-on with these unmistakable warnings of exhaustion on the other. It's basically a showdown between momentum and gravity. Now that you've seen all the evidence, the question is, which side is going to win?